Hey everyone, Anthony Venuto here with In Touch Mortgage Solutions. It's Friday, Finance Fridays, and thank you for clicking on this episode. Today we're going to be talking a little bit about the 2022 federal budget and how I think this will not really help a lot of Canadians, especially first-time homebuyers in Ontario and Vancouver. Stay tuned, we're going to dive right in. Once again, I want to take this opportunity to continuously thank all our supporters and viewers of the channel, everyone taking the time out of their day to leave comments and suggestions and feedback. If you're watching this on YouTube, please don't forget to hit the share, like, and subscribe button, as well as the notification bell so you can get notified every time we post a new Finance Friday video. Now, back to the video. So with the federal budget being announced last week and all the discussions happening now and the Bank of Canada raising its interest rates, there's a lot of conversation about the housing market and the affordability when it comes to the budget. Now, I wanted to just bring to attention a few things that I feel as a mortgage broker, homeowner who talks to first-time home buyers and existing homeowners about financing and affordability, is how this budget actually, I think, misses the mark entirely for many, many Canadians out there. And the way I think it, or the way I'm going to approach this, is that the intention was good by the government to come out with some of these propositions. However, the execution, I think, is going to be the major problem. And I'll elaborate on the fact that, A, we have the first-time home buyers savings account. Now, first-time home buyer savings account, we actually got a call last week about this from a client who had basically heard about it, and they had just securitized both young couple with the school board, now full-time teachers making great money, and they're basically now looking to get onto the market, position themselves to put some money aside, and they wanted to know what options, if I knew anything about the first-time home buyer savings account versus the RRSP savings. And now, basically what we did is we presented them with the fact that A, the first-time home buyer savings account is not active. It's going to be coming in 2023. And two, once it does come into effect, you have to take into consideration a few components. So just a caveat or sidebar, I should say, actually, is the RSP is a $35,000 limit that you're able to pull out if you're a first-time home buyer. You have 15 years to pay it back, and opposed to the first-time home buyer savings account, which is a little bit different, where you have to be under the age of 40 or 40 and below. You're allowed to contribute $8,000 a year. It's tax-free if you pull the money out to purchase a home. What happens, I believe, if you don't end up using it by the time you're 40, it gets rolled over into the RSP. So this was, good component, good conversation. They were much younger, so they had a good runway ahead of them to, put this money aside. But the more important conversation was their ability to save, was that they're currently renting a home. And, obviously with rents being where they are here in Ontario and in Toronto, we were looking at their position and they were saying, Anthony, how do we save $8,000 a year when a good percentage of our income is going towards servicing the rent, heating, gas, insurance, all these things that are now elevated in cost. So, and I sat back and I said, this is exactly why I don't think this first-time home buyer savings account is something that's going to help people in Ontario and, let's say, Vancouver, two of the major hot pockets in Canada. However, if we take a side step back and we look at outside of Ontario and Vancouver, and we will notice that home prices are yet more manageable, they're more attainable. And speaking to mortgage professionals in other provinces in our industry, real estate agents, financial analysts, anyone that we can basically get a hold of, was that home prices are still affordable in other parts of Ontario. Other parts of Canada, I should say. Ontario, there are still some pockets that are affordable, but they are a great distance away, and you have to be able to commute. And this is something that, a lot of people have to take into consideration if they're going out to purchase a home. So first-time home buyer savings account, I think for many Ontarians, any people in Vancouver, I don't think it's going to help much, as that $40,000 or $80,000 contribution limit, and $80,000 as a couple, $40,000 individually, is going to put a huge dent when it comes to the purchasing of a home here in Ontario. Outside of the province, obviously, that is definitely over 20% for some parts, or just about 20% some parts of the country. So moving forward, we're speaking of the foreign buyers ban. I think this was something that was interesting that they brought to the forefront. It was leaked out a little bit before the budget came out. We started hearing about it. Ontario obviously implemented a 20% tax, which is up from 15%. Ontario basically making this tax on foreign buyers. Ontario-wide, it was just previously sanctioned to just the Golden Horseshoe. And now basically what's happening is you're seeing these movements. So in 2016, Vancouver introduced the foreign buyers tax. It quickly made some changes for them. And I believe at that point in time is that a lot of the foreign buyers basically shifted over to Ontario before they introduced the foreign buyers tax. But I think when you look at it and take a step back, there's two things to consider. You have to look at foreign buyers and investors. And foreign buyers, I don't think, is actually moving the needle when it comes to banning them for 2 years. And this is something that, I'd like to see a little bit more data on, because it depends on what you're looking at. It depends on where you're gathering these analytics. I think last time I checked on a consensus, it was below 3% of buyers are foreign. And not to mention the loopholes inside the foreign buyers ban or the proposition is, if you're a refugee, if you're a student, work permit, so on and so forth, it still allows you the capacity to purchase a home if you're foreign. So another key component is if you actually had an opportunity to read through the 300-page document and look at the housing component of it, because I don't want to talk about any other components other than housing, is that it says the budget 2020 proposes to introduce new rules. So when they start using words like propose, I beg the question, is it going to happen? Is it something that we're just basically putting out there to, build this media hype around the conversation of affordable housing, and something that I really want to see a little bit more data on? And I would love to see them actually do this, but more importantly, I would like to see how they're going to tackle it, and if it's going to actually disrupt the housing prices and actually make a real difference. Now, speaking of affordable housing and pricing and so on and so forth, one key component to the federal budget was the introduction of spending billions of dollars and giving those monies to the municipalities in order to get more shovels in the ground and start building more homes by doubling the amount of homes being built. Now, sounds really, really good. And obviously they're saying all the right things. Once again, it's a proposal, and getting these billions of dollars to where they need to go in order to make sure that homes are built is another component entirely. But I want to take a sidestep from this objective of building more homes and having a conversation with some people that are in the trades, developers and builders, people that we know that are actually in this feet on the ground, basically doing what they're trying to achieve here by building more homes. They're telling us that, Anthony, we're finding it a little bit more challenging to find workers. Labor is a problem. And what I want to explain is that if and when these baby boomers retire, there's not enough younger tradespeople coming through the ranks in order to take over these people that are going to be retiring soon. So obviously that might mean that people are going to be working a little bit longer, and that we're going to have to wait to see a new influx of laborers come into the market, which begs the question about immigration. Hopefully with the government's aggressive migration plans, hopefully we can get some more skilled labor into these markets to actually fulfill the objective of building all these new homes. And I think that's something that's going to be important. But when? The question is when? How long is it going to take? We're already severely behind on the supply side. And even by doubling home construction, which is definitely wishful thinking, in my opinion. I mean, let me know what your thoughts are. But I think that's a wishful thinking on their part to think that they can just turn around and double the home production in year to year, especially when you have all the supply chain issues, the labor issues, getting the materials, gas, all these things. Are these new homes going to be more affordable, or are they going to be less affordable because the cost to build them, the labor involved to build these homes are going to increase? So let me know your thoughts on that. Now, moving forward, we were talking a little bit about the flippers tax, making property flippers pay their fair share. And I think that's something that's very important for Canadians to understand. So I want to take a step back and talk about flippers for a second, as I do have, clients that have purchased homes that were done as a flip, and obviously homes and builders and people that I know that actually do this for a business and for a living. So before we get up in arms about flippers and that they should be paying, obviously I agree, but most flippers that are doing this as a business are doing it through a corporation and they are paying taxes. I think what the government's trying to do is tackle the mom and pop, the guys that are just buying a home, flipping it, and trying to position as a primary residence and avoid the capital gains. But I want to just draw the attention, no matter what happens, once again, it's a proposal to do this. So I just want to bring to attention how flippers actually benefit in some regards the market. Now, obviously, you know, home prices are going to be home prices. The markets are set by what people are willing to pay for a home in that location. But a lot of our flippers are buying homes outside pockets, that these homes are either owned by hoarders, they were infested, completely uninhabitable homes that basically were complete and utter disgust. Trust me, I've seen some of these pictures. There's no way a first-time home buyer would engage in that home with not knowing how to do this as a profession, to reconstruct and tear down and reno that home. Not to mention the funding to do that. A lot of these flippers are using their own capital or private funds, or having the ability to borrow money, because a lot of these properties that they're buying, they're not able to get the financing through traditional methods. You know, you can't just walk into a bank and say, look, here's the house, it's missing walls, the foundation's cracked, you know, it looks like this. And if an appraisal is ordered on that home, the bank may decline them on the financing. We're finding that happening because we've tried a couple of times to get these clients approved. Even on the equity side, the only option was to try to get them approved with private lending in order to get them through the door. So you have to understand, these homes are not marketable. They're not something that someone can go buy. So basically these flippers will go in, they'll go in and renovate the house, they'll build it up, bring it up to par, make it look all nice, and then put it back on the market, increasing the supply of the homes in that area. So I think that's an important distinction, is, you know, in an area or in a time where we've seen in the last few months, inventories hit record lows, you know, having these types of people that do this as a business and do it properly and pay their fair share, of course. Obviously, I'm not saying that everyone does, but the majority of people that I know from our industry, yes, they all pay their taxes through the corporation. It's a business. They basically are bringing homes to the market. So I think that's an important thing. Now, obviously, there's a couple other things inside the land transfer tax rebate. I think those are important components that the budget has brought forward, and I think they are beneficial. I would like to see the government come up with more dedicated wording and propositions and timelines and schedules to see when these promises are going to come out and these proposals, if they're going to pan out. Because I think there's a lot of conversation about it, but I want to see them actually execute. And as I mentioned earlier on, the key words in some of these discussion points in the budget are proposed. So obviously these things need to be passed. We need to see them enacted, and we need to see when they're going to come out and actually start to make any changes. I think the only way to move the needle right now is to create more inventory and basically create more supply, not tackle too much on the demand side. But obviously we would like to see some changes come to the demand side to help younger Canadians who are struggling when it comes to down payment, comes to qualification, amortization. We'll do another video on that, because the Mortgage Professionals of Canada have met with the legislative, with Parliament, in order to bring some of these ideas to the forefront so that we can help many Canadians. But we'll do another video on that. I just basically want to know what your thoughts are. I personally think that if you're in Ontario or Vancouver, a lot of these conversation pieces in the budget are not going to be too beneficial to many Canadians. Outside of Ontario and Vancouver, I think that these savings accounts and some of the, maybe the flipper stuff like that may be something important. But I really think, in my opinion, is that the federal budget really missed the mark, and I don't think it's going to actually move the needle significantly. I think the only way that we're going to move the needle in the housing market is obviously inventory, and creating more inventory for Canadians to meet the demand of homeowners that want to come to Canada, or homeowners that are in Canada that want to own a home. And also interest rates. I think interest rates are going to be a major push factor for many Canadians in affordability, and we might see that sort of adjust the market, but only time will tell. Obviously, we're in a volatile state right now, and we'll do some more information on that as things evolve. But once again, I want to leave the video here. I want to take the opportunity to thank everyone for watching. If you made it this far, don't forget to hit the like, share, and subscribe button, notification bell, please, and thank you, as it helps the YouTube algorithm. And I want to leave the video here. Wish everyone a great Friday, an even better weekend ahead. Until next week, thank you for tuning in.